That seems very stressful.
Oh yeah, I mean, welcome to my life, man.
Oh, I'm gonna get so much money. What should my expectations be going into trading? Like, should I be like, oh, I'm gonna get so much money, or be like, I'm gonna be broke for a little bit? Like, how should I prepare myself to get started?
Well, I think there's two primary mindsets that you can approach the market with. The first would be a long-term time horizon. That's like the Bitcoin you put into your cold storage wallet, or you just put into Voyager and you don't even look at it for 5 to 10 years. And then you come and based on the fundamentals, if you're confident, then hopefully the price has gone up. The other way, and the way that I think a little bit more about the market, is like short-term trading, and short-term in the sense of like 3 to 6 months. A lot of times Bitcoin will go through these hype cycles where, regardless of how good the underlying fundamental technology is, people's reality becomes misaligned with like their expectations. And so you get these really large bubbles, which tend to go down. So if you can play that macro trade where you only trade like once every 3 or 4 years, and you say, all right, this is what I'm going to buy, or this is what I'm going to sell, I think you can have a little bit more flexible expectations with your returns going into market cycles.
I get what you're saying. So it's like, for example, if like not like gambling, but like if you getting like money or whatever, right, from your job, and you're like, okay, I want to plan to make this financial decision in X year, and then X year, whether that's car, PS8, etc., right? Or like a new sim seat, right? Is it kind of similar in that aspect of like, okay, I'm not gonna constantly be trying to not, I guess, gamble in a sense, like short term wise, but like plan for like long term, be like, all right, I'm gonna trade at this year, I'm gonna trade this year, I'm gonna do it with this and that and this amount of money. Is that what you're saying?
Yes, precisely.
Okay.
I wouldn't say that it's gambling necessarily. I mean, sometimes it can feel like gambling if you don't do it the right way, but there is more risk involved in that sense. But yeah, if you shift your mindset to like, what's an asset that I could hold for the next 10 to 5 years that could potentially outperform the S&P 500 or just the regular stock market, I think Bitcoin is a decent candidate based on its track record. And then, if it actually does end up being 100,000 or 200,000 in the next 5 to 10 years, then you can buy, 3 PlayStation 8s or 10 or something like that. I don't know why you'd need 3 of them, but that's kind of the mentality, the long-term time preference, like sacrificing today's value or $1 today for, $2 in the future.
Got it. So with that being said, like, does that mean I gotta be like actively checking stuff like every day, multiple times a day, or can it be like once a week or once every couple of weeks? Like, how active do I need to be, or should I be in reference to trading?
From a more like longer term perspective, I would say yes, a weekly time frame, kind of a check-in. Maybe you follow some YouTube videos just to keep your mind in the space to see what's happening. But no, that's not something that you have to do every single day. I think it's kind of a weekly to bi-weekly thing.
All right, sweet. I'm gonna do that then.